getting you ready for the major earnings that are still yet to come this afternoon. There's more earnings next week. We had massive earnings and an FOMC day yesterday. Time to dig into everything. And the earnings yesterday were actually crazy, right? The candles, the God candles that we saw on so many names, Meta, Amazon, Microsoft, right, and others, just absolutely insane what we're seeing in this ecosystem. And then, of course, they all moved NVIDIA. QQQ was up over 1% in after hours. It's just blowing my mind. Robinhood had a nice pop right off the bat and then kind of receded a little bit, but there's still some interesting takeaways from the earnings. I know that's a big portfolio holding. So, Hamid, in the midst of all that, the Fed left rates unchanged, much to the unhappiness of Donald Trump. So you can, kind of look at those pieces. So big day yesterday. What were your takeaways?
Let's not talk about Jerome Powell. This is an earnings conversation.
Good afternoon.
I know Meta is one that you are excited on. We also did have the Microsoft one too. I want to focus a lot of this conversation on the earnings that we have coming up today, Apple and Amazon and Coinbase and so many. But yeah, what were your initial thoughts on Meta?
Yeah, so I mean, Meta, like the big fear with Meta, what I think for investors was that, oh shit, is Zuck doing the same thing he did with AR VR, where he's just going crazy and going to be spending a shitload of the money, and therefore their profits are going to miss, and especially their guide in the future is going to be a miss. And it turned out that they just blew top line revenue by like over $3 billion beat, which was incredible. And then because of just the type of margins that Meta is working with, most of that $3 billion just goes directly to the bottom line. So they beat the bottom line even more as a percentage of EPS. So I think they were expected to have EPS in the $5 and some change, and they came at over $7. I mean, it was just like an incredible beat by like over 20%. So Zuckerberg's strategy seems to be working. And, now I think investors, the way they're looking at it is that, hey, if AI investment helps accelerate the growth of the revenue, which is what it seems like it's doing by serving better ads and optimizing ads better, and they're getting more revenue per ad, and their impressions are still going up on the 3 different products, then maybe we can give a pass to Mark on this spend for AI, because the future of AI might be in these smart glasses that he has been touting. And if you could have glasses on your face and have video on them, and talk to it all day, and it can see what you see and it can hear what you hear, holy shit, like you could see a world where 5 years from now or 10 years from now they're selling hundreds of millions of these glasses per year. So that could be the future of computing. I mean, that could be huge, and Meta might own that. And there's like zero revenue from that today. So if it becomes a multi-$100 billion industry that Meta owns a significant chunk of, that's a pretty nice bet. And then when you look at Meta's valuation, it has a PE of just 25. It's like lower than Microsoft's 37 PE, lower than Apple's PE. So and it's growing faster than both of those companies. It's growing faster than Google, Microsoft, Apple, Amazon. So Meta just becomes a no-brainer. Even at the current, price after a 12% pop, it's still much more attractive than some of the other Mag 7 names. So Meta just crushed it in my view. Before we go on to somebody, Microsoft or others, what are your thoughts, Evan? I know you're a Meta shareholder as well.
Yeah. So first of all, I want to preface this a little bit. You guys can see by my title that we are talking through some of today's largest earnings, recapping a couple of them. Hamid is a really smart guy, created a really awesome website with Earnings Hub, the earnings calendar that you see on the stream and all the times. And Savvy Trader, I didn't really hear what you said, but I love this thing. So I want to talk through some of the earnings and just get on here and riff about them. Obviously, Apple's one that I'm excited about, and Amazon and a bunch of others. I didn't get the chance to dig as deep as I would have wanted to into the Meta earnings. I was doing some stuff around this Robinhood earnings, which was cool. But yeah, so part of it, I need to understand more. When we were talking on the earnings call yesterday, they came out with like an EPS in the 7s. And Wall Street was expecting 587. Normally, that's something that's a one-time expense or something like that. Hamid, correct me if I'm wrong. No, we did not see that. This was just a really strong quarter.
That's just
And
because
Meta,
they beat the top line by 3 billion, and most of
yeah.
that just goes directly to the bottom line when your expenses are basically the same, right? Like every dollar of extra revenue for Meta is probably 90 cents of profit. So yeah,
And we can look through some of the numbers and like exactly what's happening underneath, but I think the core of it is right now is Zuckerberg is making a very, very large investment. I would have expected that to have start to see, when Amazon goes into investment cycles, to become a little bit less profitable, and the market doesn't always like them in those points. And then when they come back and start to focus, like you could see here, it dropped a little bit. And when they start to focus more on the profitabilities, when the stock has performed pretty well. So part of me was expecting Meta going into an investment cycle like we had the year of efficiency a couple years ago, and this year might have been a year of investment, which the market maybe doesn't like. Like for example, when they bought into Reality Labs, the market didn't like that. So I think there's a combination here of the market believes what they are investing a lot of money into, and somehow with $100 million offers and stuff like that, we're still beating the bottom line. So this is quite an impressive move
right.
for Meta for me. So I want to dig in more. I saw the headline around Meta AI, but like they're kind of just forcing that down people's throats. I don't know, but Zuckerberg is clearly one of the greatest CEOs out there. He will make big investments, as Wolfie was saying on the last one. He's not afraid to make some pivots, pull back on stuff like we did in the Reality Labs when the market tells him he's wrong. We make these jokes about how he's stealing stuff. Well, I don't know, man. This is the CEO, and I know you have some thoughts about Tim Cook. I know you have some thoughts about Satya Nadella, or maybe it was Sundar Pichai. Actually, sorry, at Google.
I know.
Well, you had
Yeah.
some positive thoughts about Satya, but yeah, I think Mark Zuckerberg is clearly one of the greatest CEOs out there.
Yeah, I would totally agree. He's focused. He by the way, he has never backed down from the AR/VR investment. He continues to say that Reality Labs is a critical part of our strategy, which is what sets us up for being able to sort of deliver smart glasses that are going to be the future of computing. He still believes that, and he's sort of like double downing on that because he gets asked about it on every call. And even yesterday on the call, if you listen to it, he did reiterate that like he sees the future as AI being delivered through smart glasses, and he thinks Meta's bets with Reality Labs is the reason that they're well positioned to be the leader in those smart glasses. And like I have a pair of the Meta glasses. They're fantastic. I mean, like if they had all day running battery, I might wear them instead of my regular glasses. They're slightly heavier. But they're freaking comfortable. I mean, they're pretty nice. And then if you could throw a screen in there somehow and make it even more useful, like I just don't see how that is not a sort of like runaway success in 5 years from now. Once the technology sort of catches up on all the other hardware pieces necessary to deliver all day with screen, still have it be like under $500, that sort of thing. But yeah, I think that's people.
I feel like I always enjoy when I wear them, but I haven't been wearing them as much lately. I wear them, I feel like, for events right now, like
Yeah.
specific things where I'm going to want to film, from that perspective or things like that. But it's not like an everyday driver just yet, if that makes sense.
Yeah,
I
absolutely.
will
But you also
say,
don't wear glasses. So, for people who wear glasses all the time anyway.
Right. I mean, I wear the blue light ones,
Okay.
So
Essilor Luxottica, however we say it, the owner of Ray-Ban, the owner of Oakley as well, who they're also doing a partnership with. Meta actually ended up taking a stake in this company. It's very large sunglass eye, whatever company. They said that Ray-Ban Meta smart glasses revenue tripled year over year for them. So it's expanding pretty quickly. They did kind of tout a little bit of the Ray-Ban Meta glasses contributing to their first half overall sales beat, but I don't know how much of it was. But they did say 3x, kind of in the current state where we're at right now.
Yeah, I mean, it's still a sub-billion-dollar quarterly revenue thing, so it's like a rounding error. But you could see this thing, selling in the tens of millions per quarter in the future. Again, like it's not today, but as the AI gets better, as the vision and microphones and everything, and the battery technology gets better, so it'll be interesting to see where that goes. But yeah, we can start talking about some of the other reports as well if you want.
You're good. I'm also seeing this Figma IPO starting to trade a little bit. Is that something you're watching at all? Not a Figma guy?
I I mean, I think Figma is an impressive company, but I'm usually not a huge fan of IPOs of high flyers, just because uh, to me the valuations seem to be super rich, and oftentimes you can't even buy it at the IPO price. They just skyrocket. Um, the IPO shares get distributed amongst tiny amounts amongst tons of Goldman Sachs and Morgan Stanley type customers, which I used to be once, and even then it was like never a lucrative thing in my opinion. So I've done well just waiting it out on great companies and buying post IPO at a much lower price than even the IPO price in some great companies, including Robinhood, Facebook, Meta,
Geez, Figma 110.
Twitter. Yeah.
So someone's buying it right now, you know?
Oh yeah, for sure. But 110 for Figma, it just seems kind of crazy.
Shout out
Yesterday
to
was
whichever bank agreed to, help bring them public and got a bunch of shares at 33 and is now selling them up here, right?
I got one
Right.
share. I got first of all, by the way, someone did comment. I did see the comment from Pen Extracts that SPY is moving a little lower, and it is now down 0.5% of the day.
Yeah, Bitcoin.
And we also got the question is why the market is down right now. Sorry to bother you. I'm kind of new to this. Sometimes the intraday moves don't always have to make sense. I did see this headline come around from Trump sending this stuff to all the bio company or the pharma companies. That could be part of the reason. We could dig around. Sometimes these intraday moves, though.
Tesla down 4%.
My favorite answer to the question of why is something down or why is something up is that there's more sellers than buyers when it's down. There's more buyers than sellers when it's up. That universally explains why markets are up or down, and that happens for like a variety of reasons that oftentimes is not explainable.
When I put out a question, I ask why is market down or up, and someone hits me with that answer. It feels like when I ask, "What's your favorite stock?" and people are like, "Chicken stock. I love cooking with it." Like same vibes.
Yeah, but I mean, there's just going to be random fluctuations in those things, and
For sure.
it's pretty standard.
I do have pulled up here the earnings hub calendar, digging into some of the stuff that we have today. It is a very, very busy day. Busy after hours of earnings. Apple, Coinbase, Amazon. Some of the other ones, we'll see. I think it's Apple, Amazon, and then when Coinbase, MicroStrategy, Reddit, Cloudflare, Roku, even KLAC, Paramount, Stryker, First Solar. A lot of really big names are going to be reporting. But when you have two Magnificent Seven names reporting earnings, it's those are tend to take the cake. Let's get this to be a little bit bigger. Here's some of what Wall Street is expecting for all of these numbers here. You can pull up on the screen. I think you can see it here. Can we get some comments about the AI? Can we get expected comments about the AI strategy for Apple? I think that is a lot of this conversation we have going on here. But you guys can see all the expectations. Apple expected around 88.94 billion. We could dig in and see how that is growing year over year. But let's start with the controversial one. Let's start with Apple. Expect the numbers out around 4:30 p.m. Eastern. I believe the earnings call. Oh, sorry. I thought the numbers were out at 4:20 p.m. No, it is 4:30, right? 4:30 p.m. Eastern. Earnings call is normally at 5 p.m. Eastern. That is what we are watching. Earnings Hub score. This is a fun little thing. This kind of gives you a quick glance at if it is expensive valuation and if it is growing quickly. So you either want this to be price says you either want this to be high and this low, or you don't want both to be the same. So that's not what you probably want to be seeing for Apple. I had a little trouble explaining that there, but you definitely not the best earnings hub score. I've seen worse. Tesla's a D, so shout out. Hamid, what is your thoughts on these Apple earnings? I know you are, Hamid, what's your thought on these Apple earnings? No leading questions.
I mean, so Apple has a problem in its core, right? Like the core is that strategically it does not seem to be able to make the right moves. It spent over $10 billion on car self-driving, on Apple Car, which it then just canceled the project with nothing to show for it. It has like released $6,000 monitors and $3,500 VR headsets in a market where the leading provider sells a $500 headset. So it just clearly has a strategic problem. And over a year ago, they demonstrated all this AI capabilities that, like, to this day have not come to be, which is kind of crazy. The iPhone 16 was supposed to be their AI phone that was going to be a catalyst. People like myself thought, okay, Apple is late to the game by a year, but finally they got it, and they're going to sell a shitload of iPhone 16s. But it turned out that, like, the iPhone 16 was a dud. None of the AI stuff got delivered, and it just has been such a lackluster performance. And internally, you hear sort of like all the problems that they're having trying to get their AI teams sort of hyper focused. They're losing their sort of team, some of their top team members to Meta, who's aggressively hiring them at pay rates that are higher than Tim Cook's pay rates. So Apple has a real problem on their hand, and I don't see how they solve the problem with someone like Tim Cook running the company. Apple needs their version of Satya Nadella. I've said that for Apple for many years now, but the core has rotted in a lot of ways because of Tim Cook for years. So I'm not sure that it can easily sort of like turn that ship around. Now, it's still an amazing brand. It's still going to do a shitload of revenues. I still use all Apple products. I use Mac. I use iPhone, but like all the new stuff is not Apple anymore. So, and then on top of that, it has another potential revenue problem on its the App Store, because companies can now move to processing their own sales using Stripe or whatever and pay 3% versus Apple's 30% portion because of a lawsuit that they lost. This is already happening in the US. We've already done this, for example, in our own app in the App Store. So their App Store revenue could actually start being on a decline rather than a continued growth. So they have like multiple different problems on their hands that are not going to be easy to solve. So not super excited about Apple in general, but yeah, it should be interesting to see what Tim Cook says on the call. What are your thoughts?
When we think of
Apple, right?
I do still own Apple. Yeah. I think this conversation here is going to be the big one around the AI strategy on the call. There seems to be this thought right now that the only AI strategy that can work is to spend as much money as you can on NVIDIA AI chips. And yeah, so maybe there are going to be some companies that go in and do that, but I think that not every company is going to go in and think the same. And I think that Apple has a very large opportunity for partnerships. I think that I'm disappointed with the lack of stuff that they've done of anything in this space. They hinted at an OpenAI kind of being able to add it to the iPhone. Apple has immense leverage with their installed user base. And, they should be able to use that in this AI space. And it doesn't necessarily have to be spending hundreds of billions of dollars on NVIDIA GPUs. So, I think that I'm okay with them not going the same strategy as everyone else. I wish there was a strategy. And I think that with the stock where it's at versus where the S&P 500 is at and where everything else is at, you can start to ask some of these questions more. These charts don't look necessarily the same right now. Are these the same ones? Yeah, questions are going to be asked, and they are fair questions. But I think at the end of the day, people like to claim that Apple's going to be dead for a while, and there's a missed thought right now that what AI is just having the best chatbot, but that's not what AI is. That's not what's going to be making billions of dollars here. So I don't necessarily subscribe to the thing that the CEO has to be this crazy innovator visionary, but you probably have to have those people in really high and important positions. Like, Tesla doesn't have to be the CEO of Tesla for it to be going in that direction. Sometimes a grown-up... Who did I say?
Tesla.
Okay, I meant Elon at Tesla. Yeah, like if Elon wasn't CEO, but his ideas were what was driving this, I don't think that changes the company. You could even argue that Tesla would be better off with someone else as CEO, Elon Musk's ideas, but someone else's execution as a CEO of a company. So I don't think that maybe what's happened there is they're missing that Johnny Ive who they let go or something like that. Maybe it's a mismanagement of talent, but I don't know. I think that people.
I gotta disagree with you on that point. Tesla without Elon would just lose its soul. And
I'm saying Tesla without Elon as CEO, him being his ideas as the person, like if he's the chief whatever officer.
A
you
great
know.
example of Elon not being CEO was like X, right? X had Linda as the CEO, but we all know who the real
Not
CEO
anymore.
was of X, right? So yeah, I mean, not anymore because like either
Is
he
there
got
even a
fired.
CEO of X right now?
Yeah, I mean, we all know who the CEO of X is. My point is that like Elon is the CEO irrespective of whether or not his title is CEO. You know, like you could call him what does he call himself sometimes? The chief technocrat or something. Like it doesn't matter. It's
Like
like no
Techno
one's going to
King?
override
But here's what I
his.
think, Hamid. The CEO's role at a company like Apple is to take a lot of shit. Is to just be able to go in and talk with Trump and then talk with Biden in one year and talk with Trump in the next. Go to these
No,
companies, get deals with whatever.
no, the
Like,
CEO's role is to be able to identify which idea inside the company is the one that they're going to bet on. And there's always conflicting ideas and there's conflicting arguments for pricing, product, direction, strategy. Like the CEO of the company is the one that says, you know what? Okay, we'll go ahead and spend a few $1 billion a year on self-driving technology. That's the CEO's call. That's a bad call, right? Like there was just they should not have ever done that. Like, why were they doing that? It just never made any sense. Um, and it was sort of obvious they were not going to have an Apple car that's going to compete with Tesla or whatever, right? Like, so the CEO is the one who's making those detailed up calls. Sometimes the CEO even has to make a pricing call. Like Steve Jobs was insistent on the pricing of the iPhone or the original iMac when he came back. He's like, this has got to be like, $1,500 or less, right? Like, so when they release these products, the CEO is instrumental to making sure that the price is right, that the strategy is right, that the marketing campaign is right, that, like the discussions with Trump are irrelevant. Um, not one time did Steve Jobs ever meet with the president of the United States.
Hmm.
It just didn't matter, right? Like you got to be hyper focused on the right things.
I think you're wrong to think of a company that's $100 billion growth company that's innovating aggressively can act the same as a $3 trillion largest, one of the largest American companies doing geopolitical games and stuff like that. Like Jensen Huang, he is doing a little world tour out there talking to every single person that he can. Whereas maybe the $100 billion companies or $10 billion companies are able to innovate. I think it's fundamentally there is a different role for a CEO once you get to the top. And I think just like a coach, sometimes the offensive coordinator being that driving force on the ideas on the offense is better than the coach, and the coach frees up letting that person
Yes,
do that.
you're
So
absolutely
I
right.
don't
Like
think there's any.
he also needs to be able to talk to the president if need be, but that's not the important part, right? Like
Hmm.
the thing that makes Jensen Huang amazing is not his ability to talk to the president. That just happens to come when you're that good anyway, because talking to the president or the politics of it is just the
Here's my thing
simplest,
though,
easiest portion of the game
but it's
as a
not though,
CEO.
Hamid, because that
But
is the difference between $20 billion of Chinese revenue that he was able to go unlock through probably those conversations, where
100%, 100%. But
you have to have the
what
great
makes
product. That's underlying all of it.
yeah,
Yes.
exactly. That's what I was going to say. What makes Jensen Huang great is the fact that he's got this incredible technical genius background, but B, that has allowed him to sort of focus on the right product for the right time, and just continue to like nail it time after time on the product side to the point where they have a product that China even wants, right? So then like the strategy of like talking to the president and getting him to sort of like go easier on the tariffs and all of that stuff is just like somebody who's at that level is easily able to pull off something like that versus someone who just doesn't have that background. Like if you take just a business MBA who's running NVIDIA, they would just not be very good at all of the other things. Maybe they would be great at talking to Trump, but they wouldn't be great at the product direction and all of the sort of minutia detail that's necessary to make sure that the next Blackwell chip is going to be focused on the right things for AI, right? Like, so those are the things that I think Jensen Huang just excels at.
Hmm.
I will say there is a thought going on right now, and it's interesting to me, and you could talk to this. There are times in the market where you say I am spending more on CapEx and your stock will go down a lot. There are
Right.
times when you can say I'm spending more and it might get even to, maybe it's not up quite, we'll say, but the market is looking through it. And this is definitely one of those times where Meta saying they're going to spend more, Microsoft, they're going to be saying they're going to spend more, Google. People aren't looking at that as a bad thing. They're looking at that as we are seeing an opportunity here. It's probably a good thing for NVIDIA. Now, today's CapEx, a lot of the times, is tomorrow's write-downs. Not every one of these companies is going to have these strategies right. And I don't think we can fully confirm that Apple's strategy of letting these other people play out in this immense CapEx space and partnering with people is the worst one. I'm just surprised they haven't moved aggressively on the partnerships. Or maybe even Apple doesn't make large acquisitions. We're in a different world now, and the definition of what a large acquisition is could change. And I work with Perplexity, so I mean, if they want to buy Perplexity, that's a double win for me. But maybe they have to break that under $1 billion acquisition rule that hasn't been broken much, and maybe there's a 5, 10, $20 billion acquisition to be made, and that's still significantly less of the CapEx that some of these other people are spending. So we'll see. I think it's still.
Their Beats acquisition was a $3 billion acquisition, which also didn't make sense, by the way. Who the fuck cares about Beats? You know, like even their largest acquisition to date was like of this irrelevant company that like.
But that was to get Dr. Dre and the cultural side of things, right? Like that was what that acquisition was to make Apple look cool.
What do you know about the culture, bro?
More than you, buddy.
Well, that would be my point, is that like Apple has just been focused on the wrong things, right? Like getting the culture side of things, like with Dr. Dre, like why is that so important to Apple? Get Siri right, you know, like get it to autocorrect.
You want people to think that buying your product makes them look cool. I feel like that's a huge
And one thing I will say,
that was already the thing with Apple.
We are 4 years after ChatGPT, 3 years, whatever it is. No one has made a good Siri yet. No one. So, yeah, I mean, maybe it's a harder problem than people thought.
That's a hard shot at Grok, Ani.
No, I am telling you, have you used them? They are not there yet. Like they are fine. They're okay. They're solid. They're better.
Right, like ChatGPT is amazing. It's far superior to Siri, right? Like, but it's just.
I'm not saying it's not better to Siri, but it's this vision for what people think Siri is and it can be, and what we were sold for a while isn't there anywhere, really yet.
I had more fun having conversations with Siri probably a good 13 years ago than I feel like I do now.
100%, because back then it was like the leading edge top tier tag versus today where it's like horrible. And like you look at Apple, but when Amazon came out with Alexa, Alexa destroyed Siri, and that has been the case for more than 10 years.
Sorry, could you clarify your request?
There you go. Was that Alexa or Siri?
Yeah, no, that was Alexa responding. But the point is that, like, again, like instead of going after Amazon's speakers and smart speakers, which they eventually tried to go after, they came out with a $350 smart speaker when Echo, Amazon's Echoes were selling for like as little as $25 with this smart technology built in. So you could buy a $25 Amazon thing, or you could buy a $350 Apple thing. It was just dead on arrival, and eventually they had to cancel that product as well. Apple has just had miss after miss after miss for the past 10 years, and nothing about that company tells me that's going to change in the coming years with Tim Cook leading it, because Tim Cook has been leading it for the past decade as well. So when you come out with lots of fanfare and release a $6,000 monitor, and every single Apple owner, MacBook owner, has a different monitor on their desk than an Apple branded monitor, you're like basically leaving this $10 billion market for someone else to dominate, right? Like everybody's external monitor is a Samsung or something non-Apple. Whereas it should be Apple. They should have a $1,000 monitor, and everybody's would be Apple if they had a $1,000 external monitor. So there's just so many examples of the little misses like that with Apple that just like tells me they're not going to be the company that is going to fix all these problems. And because the problems are also not big, they're just like tiny little decisions that need to be just made at the CEO level and then executed by a great team, which they have, but they're just not being, they're not being decided internally, and that's what is taking down Apple little by little.
I'm seeing some of the comments too as well. Yeah, Mert saying Tim is a manager, not a leader like the others. Shadow Walker wants us to talk about stock splits. Thinks Meta or Netflix will do one soon. I think it's about. I mean, fair enough. Meta's at like $800 now. It would not surprising.
Yeah.
Would make
I
sense.
wouldn't be surprised if Meta hits 1,000 soon, and yeah, I could see them doing a 10 for 1. Netflix is already over 1,200, or I don't know what their latest price is, but yeah, I could easily see Netflix doing a 10 for 1 as well.
I've never heard of this, but this guy says that his default behavior when he buys an iPhone is he disables Siri. I'm not going that far, but interesting.
Let's talk about some more of these other earnings that we have coming that I am looking forward to. Let's get the hub of earnings back up. Amazon is the other huge one, big dog in the space.
Oh yeah.
Yes.
Wall Street's expecting 162 billion, EPS of $1.33. These ones numbers should be out around 4:11 p.m. Eastern. Earnings call 5 p.m. Eastern. Did say 4:11? I realized that 4:01. Sometimes you see stuff and say something different. A lot of analysts being a fan of this company, not getting too many downgrades. Someone has a $140 price target. Who are you? All right. Nope.
It
must be deep down. Yeah. It probably is old. Let's make fun of them, though. Seaport Global announced a $145 price. No, that's a buy. That's a buy. All right. No one's getting the smoke. What do you think about Amazon earnings here? We are coming up at an interesting point. The stock actually, if we look at the price on here, I would imagine it's fine, but nothing crazy.
Yeah, it's like at near all-time highs, which Amazon kind of deserves. I mean, I feel like it's not an undervalued company, but it just continues to crush it. I mean, like everything I buy is from Amazon these days.
PE is a 37.5. Price to sales is pretty low. But I guess that kind of makes sense.
Yeah, because of the retail business being such low
Revenue
margin.
growth still 10%. EPS growth. This was them in an investment period.
Is that still a loss leader for them?
The e-commerce side.
Yeah.
I think they make money off of that, but I haven't ever looked into their sort of detailed breakdown of their numbers, so I don't know.
Yeah, they started making more money once they started just, you know what they did with, it was a little bit predatory with the practice, but I saw that the big change for them for making money off the e-commerce site was when they started running data analysis on what are the best sellers across the Amazon site. And then they went in and they made their own brand for each one of the best sellers, Amazon Basics. And then they put that as the top result for any time anyone searched. And they just annihilated all these other brands.
It happens every single time with every, marketplace, basically. The owner of the marketplace eventually comes in and, Oracle did that for its growth. Microsoft did that for its growth. I'm surprised Apple has not done that with the App Store, but yeah, it's pretty common.
So the reactions yesterday were awesome, right? When you look at the stocks today, Meta's up 12% right now, which is crazy. That is a huge move. Microsoft, we are up 4%. It was up 9.5%. It dropped half of that right off the open. Amazon certainly, could see this making a move. I mean, it was up 3.5%. In after hours last night, it's up almost 2% already today. Stock is back in green as well for the year. It was down 25% earlier this year. It is green 5.5% now on the year, but it hasn't had the same move that some of the others have had. Last 5 years, Amazon's up 53%. Same time period, Meta is up 236%. Same time period, Microsoft is up 165%. So it still feels a little bit like a sleeping giant. It's 10% a year for the last 5 years, while these other ones are doing, 20, 30%.
Yeah. Well, it's because the e-commerce business is such a low margin business, right? So I think that Amazon's high margin business is AWS, and Microsoft has kind of come back from behind and like really challenged them there. Um, Satya seems to be executing way better than I forget Amazon's CEO name, but
Andy,
yeah, that's right. Andy, uh, his last name is
why am
escaping
I
me.
blanking? Evan, what is it?
Yeah, I was gonna let you guys play with it. It's Jassy.
Jassy.
Andy Jassy, that's right. So Andy Jassy to me hasn't been super impressive, but yeah, I mean, like Amazon as a company has continued to be pretty amazing and just continues to grow so fast. But with a PE of 37, it's not super attractive. Again, I would way rather own Meta over Amazon. Meta's growing faster. It has a lower PE. It's more profitable per dollar. Seems to be still hyper focused on the right things. Mark just seems to be executing on all cylinders. So.
I was talking with somebody and they were discussing one area slash business line of Amazon that they felt like wasn't fully explored yet. Was they're already essentially solving last mile delivery, and they pretty much solved it for themselves. Opening up that and making that a system that they just offer to a lot more companies in general, saying, hey, we already have the distribution done. You can just now click in with whatever your service is, and we'll just provide that last mile distribution. I still feel like there's an opportunity there for them.
Yeah, for sure. I mean, then the question becomes sort of like, how big is that business? What are the margins of that business? See, the thing with Amazon is that their last mile delivery is being done, like obviously at an expense for them, because they have the incentive to do it as low priced as possible because they're delivering stuff for free for people with the
Right.
Amazon Prime subscription. So it's the question is like, what kind of margins could they have on a business like that, and how big is that business? Is it a $5 billion business? Is it a $50 billion business? Right? Like, so that makes a big difference. And if it's low margin, then it's like, what is it going to contribute to profits at the end of the day? So there's bigger, better opportunities with Alexa and AI and all of that deep integration, and obviously AWS growth could still continue for a long time, and just providing AI services through AWS, right? So that companies don't have to build multi-billion-dollar data centers to deploy AI products. Like take a company like Rivian as an example. Rivian doesn't have the kind of money that Tesla has to build its own like massive 100,000 GPU data centers for NVIDIA. These things cost multiple billions of dollars to build, right? So what can it do? Well, if it could just feed its data, like, because it's getting camera and video data from all of its cars, to AWS-like services that are providing AI-based solutions at a fraction of the cost, because they could just pay for the service on a as-you-go basis, as needed basis. That could be a huge business for companies like Amazon. So
Yeah,
I
makes sense. And even Tesla's not quite as scaled there as they're ultimately going to be. Evan, what was it? They're at like 67,000 right now on those
What?
data center clusters.
Oh, Tesla with how many? Yeah, Tesla was at like 67,000. I know they were saying XAI had like 100, 200,000 or something crazy.
Yeah. And just
Is there
continue
somebody
to do
who's
that.
tracking these numbers? How many GPUs everybody has?
I mean, don't go make me start another Twitter account here. I'm too busy. No, please no. They're gonna say you keep winning. You're gonna be tired of winning.
Personally, we just asked Sawyer and Omar. They seem to have
That's what happened there.
a pretty good handle on how many there are.
Yeah. But there's so many companies that are building these things now. Like, you're like, how many does Meta have versus AI
Also,
versus
but
Google
here's the thing: it's even going internationally too. If you look at this Nvidia headline from this morning, Stargate Norway, which is a partnership between OpenAI, Aker, and Nscale. Stargate Norway is the first of its kind, 100,000 Nvidia GPUs and 100% renewable energy powering sovereign AI infrastructure for Europe. Sounds like
That just
maybe
got announced, right?
yeah, or like earlier this morning or something. 100,000 GPUs a country or something is the go rate in the West. We'll see if that goes up too.
Yeah.
But it kind of goes to the fact of like, listen, is this the best thing to do right now? Barrel head first into this at this moment in time when maybe 5 years everything's a lot cheaper or whatever, but how far behind are you? There's definitely a question that you have to weigh when these chips are in this high of demand, especially by the largest companies in the world.
Yes.
So I don't know.
Question real quick for Hamid. This just goes back to something you guys talked about, which is environments where people are heavily looking at CapEx. And I do believe that right now is that type of environment where people specifically are looking for CapEx to continue to just go up. And the second that you see a pullback in CapEx, it's a huge red flag, it seems like, with these companies. Do you want to speak to that at all?
Well, I think that I don't know if it'll be a red flag if they start reducing their capex. I think, like, generally speaking, you don't want somebody to be spending a shitload of money without any returns, right? But when you look at the results from like Microsoft and Meta yesterday, they're just like destroying their expectation numbers, right? Their top line revenue growth is fueled by AI, and even Google is doing that, right? So Google last week reported, and they also like are beating top line revenue numbers. So when you're beating top line revenue numbers, and most of that is because they're all in like these high margin businesses, by the way. For every additional dollar of revenue you get in all of these software based businesses, you're generally taking 90 cents, 80, 90 cents to the bottom line. So then it's like, okay, well, we can forgive you if you want to take, instead of 80 cents to the bottom line, spend 40 cents of that extra revenue on additional capex. That from an investor's point of view, and me now having my investor cap on, I think that's a very reasonable spend. Is that like, hey, I'll forgive you for spending more on capex as long as your revenue is growing rapidly. So what was happening with Meta and its capex spend on AR, VR is that there wasn't any top line revenue growth from that business. And it was just like losing money every quarter. And it still is to this day. It's like, I think it just lost $4 or $5 billion last quarter. So, Meta, as profitable as it is, could be even more profitable if it wasn't spending that money. But I think, I think you can forgive Mark Zuckerberg a little bit.
Imagine what Meta's EPS would be if they didn't invest in Reality Labs and AI. Like that would have been like a $12 number.
Yeah,
that would have.
What's funny is that they currently have like a rounding error amount of revenue from all of that investment, and if that investment materializes, it will materialize in the hundreds of billions of dollars 5+ years from now, right? So it's a investment for the future of the company, and if their existing businesses continues to grow, and then all of a sudden they start bringing in an extra $100 billion of revenue, then all of a sudden the entire game changes, right? So I like Mark's strategy. It's pretty solid.
We got a question, Evan. Do you want to pull up that last question from the audience? Hamid, curious to get your thoughts on this from a fan of the platform.
Fixed income data, like looking for what's
bonds.
Yeah, Gav, you have to read them out loud. That's how.
Okay, yeah. Well,
yeah.
I mean,
Go ahead, Gav.
Sure. Hamid, Earnings Hub. Is Earnings Hub always going to be strictly for equity analysis, or would you ever consider adding fixed income data in? Looking for a one-stop shop and really like your interface, man. Regards, Jay Ben.
Most likely it'll be equity analysis, just because it's all about company earnings and revenue, earnings, revenue or earnings calls, that sort of thing. It just makes the most sense to be focused on for earningshub.com, but that doesn't mean we might not venture into other areas with possibly other products. But right now,
what are some things you're excited about? I would love to get a little bit like deeper on the numbers with like whether it's forward guidance, but also like the segment data too. I'd be interested in.
Yeah.
I'm a fan of that.
Yeah, there's definitely a lot we can add. And like the challenge always becomes like, how do you add more things without complicating the interface? And we just released, for example, dividend history yesterday. And like we kind of did it without fanfare, just because like it's not in your, you can't like easily find it, but like it's there now. So if you find the stock under the stock info tab, go to dividend and click view history, you can kind of see that we now have like price history for like years of price history information. We have earnings history. So like we provide detailed earnings history and graphs on all of that stuff. But you know, the key is to provide it in a very easy to use interface. One of the things that I am kind of excited about that we're going to start working on is using the Earnings Hub score to come up with like possibly the Earnings Hub 25 index, and start tracking that the performance of the Earnings Hub 25 index in an automated way that would be potentially rebalanced every month to the top 25 performance based on the Earnings Hub score. And if we could outpace like the S&P 500's performance, which I think it should be pretty easy to do, then that could potentially be a ETF that we might launch in the future. And I'm probably saying way too much right now, but like that would be an interesting thing to do. So we'll see.
Smells like an ETF is where I was going to say, and then you.
But first, we're going to track it just to see, like, are we fooling ourselves, or is the Earnings Hub score something that can actually find interesting companies and rise them to the top?
It's probably a good conversation to have around earnings time. But as somebody who's been investing for a long time, this is, you know, a crazy bull market that's really, you know, except for 1 year, basically just ran for decades now almost. And what's your thoughts on kind of what stage we're in of it? As, you know, somebody who clearly is heavily invested in the market, have you been raising more cash at all lately? Like, where do you think that we're going to continue to go, not just in a matter of this quarter, but years from now?
Yeah. So, I mean, one thing that I think is different, like a lot of people call this a bubble, but like one thing that's different about this versus, let's say, .com or, you know, like the 2008 housing bubble or whatever, is that like there's actual revenue and profits around this particular bubble that are pretty solid. Now, that doesn't mean there aren't pockets of way overvalued stocks, right? Like every now and then you get like all the energy stocks to skyrocket because everybody's like, oh, nuclear is next. And then all these nuclear companies that have no revenue are exploding, right? Like those types of bubbles just naturally form all the time. Like there's no escaping that. But overall, the market doesn't feel ridiculously overpriced. That doesn't mean there won't be a 20% correction at any given time, as we saw in April because of tariffs, so especially if it's induced somehow because of something silly that someone's doing, right? That said, I'm always also like managing risk in my own portfolio by having a pretty substantial amount of it in cash when I think that things are really overvalued or valued at all-time highs. Not necessarily even super overvalued, but valued at all-time highs. I've been, for example, a big seller of Meta and Rocket Lab and Robinhood. Those three are my largest three positions in my portfolio. Had I not sold any of those shares, they would be worth way more today than they have been historically. But I've been selling those to raise enough cash to where I'm comfortable if we see a major correction, right? I've been growing my portfolio at a pretty like ridiculous rate in the past couple of years. It's just been incredible. But that's why I have 25% cash, is because I think that rate of growth is just probably not sustainable, right? Like I don't see us growing. You know, if I was to look in my portfolio, since you can easily share your screen, Evan, you want to pull up my portfolio real quick, just to comment really fast about something.
Give me a second.
But just looking at it, like my 1 year performance is 180%. Year to date is up 73%, right?
Oh,
so like that is just like, I do not have any such expectations that over the next year we would be up 180% or even 70%, right? Like I'd be happy if it's up 20%, right? It'd be pretty amazing still.
for sure.
So that kind of growth makes me de-risk a little bit, So like I have been a net seller of Robinhood and
There you go. 1
and
year is
months.
casual 150%, 180.
175. Yeah.
Not bad, not bad. We had a little dip here at the start too. We're down 13,
Yeah,
15%.
the first 6 months when I launched the product, I was down like 15%, and it was like, hey, the whole world can see my portfolio, and and you can see that I'm down. But like I was like, I'm a long-term investor, and eventually, I expect to come out of that 15% dip. But it was definitely out there for people to see.
Here
Anyway.
we go. There we go. Now we got the holdings. Rocket
Yeah,
Lab. Rocket Lab, the largest holding. Interesting. So more than 25% of Rocket Lab still.
Yeah.
Robinhood, Meta, Bumble.
You know what's funny about Rocket Lab is that it still has click on Rocket Lab real quick. It's a $22 billion company relative to, I think SpaceX is valued at what, like 300 billion.
Uh-huh.
So this is a massive
400
market that's
even,
only
maybe.
going to get bigger. Everyone wants to have satellites in orbit. They want to have communication satellites and internet and direct to cell and
They were
all these things. And Rocket Lab is about to launch their next gen rocket, which is reusable, and they have tons of satellite technology. So it's pretty incredible. I think Rocket Lab is going to continue to do well.
they
so
were a
I'm
SPAC, right?
I think
Were
it
they?
originally was a SPAC, yeah.
Yeah. Guess a few good ones made it out.
By the way, we just added this cool new feature of past positions. I don't know if you can see that in the lower left-hand side of the positions table. So you can click on that, and then you can also see some of my mistakes. Like FUV was a huge mistake, but
Yeah,
I've been
that was
in and
bad.
out of various different
Vroom,
things.
honestly. Oh, big open door guy. Before Hamid was an open door guy before it was cool.
Well, when it first IPO'd or SPAC'd, I should say, there was a brief moment when I was impressed by Chamath before I realized what a swindler the guy is. So, well, I'm just going to throw out all of the things on the air here, but
Yeah, tell us how you really feel about Chamath.
I like the Bitcoin. I truthfully, I don't know about Supermicro, but I get the kind of like turnaround story, but I don't know.
Click on them and look at their revenue growth. Forget about everything else, but like look at their revenue growth.
How do I find the score?
Oh, go back. Oh, you know what? I forget that the Savvy Trader doesn't have the earnings hub score, but click on the earnings tab at the top there. No, on the top or the right side. The under SMCI.
Okay. Earnings. Okay.
Yeah, so you can see that revenue growth is just astronomical, and I think that that latest quarter being down.
Is this them? They miss revenue every time. Okay.
Yeah, they've been guiding poorly, and I think that just the spend on data centers and it accelerating just makes me super excited about SMCI.
Why not? I feel like there's better ways to play it. Maybe not Dell specifically, but what's
Dell
this
is not
revenue
founder
growth?
run.
Michael Dell doesn't run it? I thought he does.
No. Did he come back? Because he retired for a while. I don't know if he's back, but
where's the chart here?
You can't get it from here, unfortunately.
Gotcha.
Like we gotta add some additional capabilities to
Let's do this.
You could do it on earnings hub.
Honestly, merge them together.
Yeah.
Put it in one. All right, window. There we go. Okay. So
then go to
earnings.
the earnings tab.
No, nothing special.
Like,
what about like this one? This is this is a data center, like I believe it's data center cooling play. Maybe. I don't know, but this is like a data center related name that is kind of that's how it's gotten popular. I think there's I agree with you that data center thing is pretty crazy. There's some ETFs we've gone with, but I wonder if the best
So
play,
you know how,
maybe.
like,
Yeah.
you know how like Elon built that data center in like 90 days
Yeah.
with like 100,000 GPUs, or like 120 days or something like that. The reason he was able to do that was
Supermicro, you're saying?
SMCI.
Yeah.
Yeah. So SMCI is in this position of like really benefiting from the data center build outs. Now they've had some product delays and shipments of various different things, and also like Nvidia delayed Blackwell, which they had like heavily invested in like being ready for, but then like Blackwell didn't ship, so they couldn't sell their product as quickly as they I think they're going to. So I suspect in the coming 6 to 12 months, SMCI is going to do really, really well. And when you look at that PE and price sales ratio and the market cap, I think like it's very attractive.
Yeah, I encourage everybody to jump through
Just a
all and
small
check out
chance,
the
just a smidgen chance of accounting fraud somewhere in there.
Yes, that is the reason I haven't made a much bigger bet on them. But there's definitely a good set of arguments against the bear case for SMCI as well. They're low margin. Their margins have gone down as opposed to up. Management expects them to go back up again. They had accounting irregularities that caused their auditor to quit last year in October, but then they have basically, management has stood behind it, and there have been other auditors that have come in and like certified it. So there's definitely some bear case things there. I would have made a much bigger investment in them if it wasn't for those things, but I think less than a couple percentage of my portfolio is in it, and it's already up like 40% or so, maybe 35% since my average buy-in price. So
Playing around with earnings hub score, you can kind of see why people like certain stocks and how like they can catch their radar. It doesn't necessarily mean they're always going to go up, but like when you get all of these metrics going in one way, this price to earnings, I mean, it could be worse. But yeah, I'm just, Oscar obviously became a FinTwit favorite for a little. Here's DraftKings. Upstart is a FinTwit favorite right now. They're trying to target it, but doesn't quite have the valuations. I know we're at the top of the hour. We're past it. This was a fun time. Big day of earnings. We got the spaces coming up. Earnings Hub did have SMCI as an A. But, I mean, you got anything you want to leave the people with as we're kind of looking towards these earnings today? I hope you join us on the spaces.
yeah, I'll hopefully be there as well. No, nothing in particular. Thank you. It's always fun to chat about stocks and investing in general.
100%. Is
Nice.
there
Wherever
any?
you're watching this, subscribe, like the video, like the channel. Come join us in spaces. What were you going to say, Gav?
Is there any current codes that you're running for people who are signing up for Earnings Hub?
No, the majority of the site is free. So there is a 10% off the annual subscription, which makes it $90 rather than $100. And I think that it's like the best freaking financial product for the price that exists. So I highly encourage people to check out at least the free version.
Yeah, definitely. I mean, like you said, most of it's free to use. Go scroll through, especially look at the stocks that you have in your portfolio. Why not get a look at them? Earnings, clearly, if you were paying attention yesterday, you could see that earnings matter. They can move mega cap stocks 10% in a day. So you don't want to just be sitting by as a bystander. You want to stay informed. I think part of why Hamid's been so successful is you're active with your portfolio, right? I constantly see you trimming, adding, finding positions, doing the research. You're not trying to get 10% a year, you're trying to get 100% a year, right? Or whatever that number is, it's beating and outperforming the index. And so for all those watching, probably most of you have some type of active involvement in your portfolio. This is a great free tool to help supplement that. There's a lot of tools out there. A lot of them do cost money. This one's nice because it does have that free piece to it, and also it's a great interface. It's easy to use, right? Why not just jump in there and check it out? I know that we are going to wrap up here. I think we're all good. I was stalling here because we need 9 more people to hit 10,000 people watching this live stream. So 9,991 right now.
That's funny.
Yeah, super cool, super cool. Evan, anything else for you? You want to wrap us up?
Nope. Have a good one, guys. I'm on the spaces right now. You can kind of hear it in the background. Have a great one, team.